Just changing screens. Hello everyone, good to be here. Just move that out of the way. Hopefully you can hear me. Apologies for any breakup in the sound. Anna's just checking she can hear me. Yeah, fine, great. Apologies for any breakup in the sound. If it does occur, it's something we don't have much control over, I'm afraid. We live on the top of a hill in a national park. And when we get storms up here, they do tend to affect the connection. So just bear with us. Sorry. Yeah, we've actually got the mast on the top of the hill here as well, believe it or not, but there we go, such is life. This is cable, just, this is on 5, I think, 3. Okay, we've got a really nice sell on the pound, buying of the dollar, so really nice cross and strong trends either way. I've started with the renko, I've got the YM up, and this is on 3 time frames, so I've got 15 second, 30 second, and 1 minute strung across the bottom. So we've got the time frames, we can look at volume, we can apply volume price analysis, and then up at the top, you've got all the advantages of trading on a non-time-based chart. We've had a really nice run lower. I mean, pretty straightforward trading, I have to be honest. And all you have to do is wait for the news to dissipate, for the volatility to calm, and then, as Anna said, you trade what you see on the chart and don't, in the nicest possible way, put a great deal of thought into it, try to analyze why is this happening? Why is this going up? Why is that going down? Shouldn't it be going the other way? Those sorts of things which go through your head, just put them to one side and just trade what you see on the chart. And if you have the VIX up, which I've got over here, just pull this across. This makes it even more straightforward. This is the VIX on various time frames. I've got the 15, I've got the 10. Sorry, that's just changed that one to 5. Put that one back to 5. There we go. So I've got the 5, the 10, the 15, and the 20 minute. Volatility all over the place, but generally speaking, the VIX has been rising pretty strongly. And that's the reason, particularly in this last, since we started really, once Anna started talking, the market's really started to develop a nice trend lower. I'm on the YM. I'll go and have a quick look at the other two as well. But that is the reason we were seeing a very strong reaction in the VIX. We're now starting to see some sideways coming in. We've got volatility triggers everywhere, so we're seeing sideways price action here. We've even got one on 20 as well. So that was really, really straightforward stuff. And when you go into the renko, we just pop it. This is the 30 second. Really nice move. And the two indicators that really stand out when you're using it on the renko are the trend monitor at the bottom and the trend dots. And as we've said many times before, the trend dots will always transition first. They will always change into a transitional color, but not only that, they will move from above in a downwards trend. They'll move back and below if it's going to be a reversal to the upside. Here you're starting to see it. We're starting to see it dip down again. But the key point is the trend monitor doesn't transition. Bear in mind this is 30 second. This is 15 second. Of course, you're going to see transitional changes on the 15 second. But even here, we've got the trend monitors been right the way through. No flicker of a change in here. We had quite an extensive congestion phase here. We had a minor change into darker red and out to darker blue, but it never went to brighter blue. It stayed in darker blue. Now we're coming out the other side. And that really does reinforce the fact that, when you're using it with multiple timeframes, as we are here, the trend monitor was developed for one thing, one purpose. It's only got one objective, and that objective is to help to keep you in through these congestion phases, through here, when you've had a decent move lower, you're starting to panic even here. The market starts to reverse. You think, oh, shall I close out? No, you've lost all this. And that's what happens to most traders. It's the one thing that defines those traders who are able to move forward with their trading account and those who can't, because it's not a fact that you're doing things wrong. It's the fact that you haven't got that little bit of help. They used to call it mother's little helper years ago, which was just gin, in case you didn't know. But it is that little helping device which just gives you enough confidence, particularly if you use it in multiple time frames, to maintain a position through these congestion phases, which are an absolute killer emotionally, and to then come out the other side. And that's what it was developed for. And in conjunction with the trend dots, which change first because they work very close to the price action, the trend monitor, which takes a more considered view of price action. They are the perfect combination. And working on the renko bricks, they really are truly the best way of, sorry, excuse me, I think there's someone at the door. They really are the best way to combine those with a non-time-based chart, because what you will see on a non-time-based chart is momentum. You never see it on a time-based chart, in the sense that within a candle, if you take any, a 5-minute candle, what you see on a 5-minute candle is one candle. What you see on a renko chart, or what you see on a tick chart, is you see that time aspect split into the little components that make it up. And that's why tick charts and renko charts are so powerful, because you see momentum. Because each of these bricks, we've got 8 here. Basically, I'll check these in a minute. This is set to 8, so we've got 8 points. In other words, we're on the YM here. And what the renko optimizer does, it sets the default to the minimum price change. So on the YM, it's a point, and on the NQ and the ES, it will be a tick. So here it's very straightforward. What we're looking at on each of these bricks is 8 points here, 10 points here, and 13 points here. And if we're trading the mini Dow, we're trading at $5 a point. So each of these bricks is worth 40. Each of these bricks is worth 50, and I'll let you do the maths on the third one there on 13. So, this run down here, there's a few $100s in here for sure. And even if you take a few bricks out, then, it's worth having. And we're just developing, the moves continuing. We went through this phase here. We've come out the other side. We've turned red again. This hasn't flickered, not changed. We're still in here. We had the congestion. We're coming out the other side. And if I pull the renko over, sorry, not the renko, the VIX. There we go. What's happening now? We're starting to see the VIX rise again. So, what do we expect to see in terms of risk? Risk off. Now, what's interesting at the moment, we've got a whole, I'm just leaning over somewhere else, got one of our accounts up at the moment. We've got a whole bunch of yen positions, long selling yen, basically, buying the pair, selling yen. We've got a whole bunch of positions. And we've got a very, very healthy profit in for today so far. And what's interesting is the yen down here, because if this is happening, expect to see the yen start to kick up, and to be honest, it's not happening at the moment, and hasn't been for the last sort of half an hour or so. It's just been heavy yen selling, and it's one of these, it goes back to what Anna was saying, and what we always say: trade what you see on the chart. We get questions in the forum, in the chat room, in the private chat room. In fact, there was one yesterday. Someone asked the question, well, why is it doing this? And I replied and said, look, don't worry about it, just enjoy the ride. And that's what it's about. Just enjoy the ride, trade what you see on the charts, and just enjoy the ride. When the markets are fast moving like this, and it's pretty straightforward stuff, then just enjoy the ride. You can see the volume rising here. I know this is 15 seconds. Let's just check these out, make sure they're set to the right time frame. This is on 15 seconds, so make sure I don't set it 15 minutes. There we go. You click on the renko, and what it delivers is the optimal brick size for that particular instrument at this particular time of day. And what it's telling us is to set this to 9. So this is a little bit, I think it was 8 before, so we've now crept up a little bit. So we've now got 9 points in each of these bricks. Let's just check what the 30-second one is. So we'll reset that one. Okay, so that's crept up a little bit too. That's on 13. So there we are. We've got 13 points on that one. And this one will have crept up a little bit as well. Just set that one, reset that one to a minute. Probably that was a little bit higher still. Okay, we're on 19 there. Okay, so each of these bricks here is now 19 points, 13 points, and 9 points. And that is a fact of the renko. The slower the time frame, then the larger will be the particular brick size. And what you're starting to see is, and then you're down onto the volume price analysis aspect of the chart structure, and also the volume that's coming in. We've got a nice little 2-bar reversal here, so that's almost a perfect hammer. So you start to put everything together. You're looking at the VPA market from the perspective of volume price analysis, and you're looking at this from the perspective of momentum on the renko. And it's just a really nice example. We're starting to see it. And what we're also starting to see over on the VIX, we're starting to see a slowdown in the upwards momentum. We've got some volatility coming in, and that's the reason you're starting to see this now reverse. And you can see on this particular time frame, the trend monitor, we've gone through a pretty quick transition here. We've gone from bullish, from bearish, beg your pardon, through a single color, dark red. We've come out the other side. So there's been no dark blue on this one. We've come out into bright blue. If this is going to be a strong change in trend, then we're going to see it reflected here, and we will see it reflected across over onto the other side. Let's just hop over on to see what's going on the other indices. Right, this is the three of them. This is on much slower time frame, so we're on 5 minute here. This is on the YM, just what we were looking at. We're on the 5 minute on the NQ, and we're on the 5 minute and on the ES. And there are several reasons that we're starting to see that reversal. Much lower time frame. You can start to see the buying that's come in here. We had a wick to the lower body. We got a lot of volume coming in under here, and therefore, we like to see a reaction. That's not necessarily the case that we're going to see a complete reversal. The VIX is starting to drop a little bit, so we're starting to see that anyway. We move across to the NQ. What have we got? We've got a volatility trigger. Therefore, what do we expect? Well, possibly congestion, possibly a full-blown reversal in due course. Similar sort of price setup over here. We've got a good volume under this candle, wick to the lower body. We've also gone through this, I'll just pop that up full size, that's quite interesting. We've got this very strong cluster. These two levels here on the accumulation distribution indicator are extremely strong. Let's pull that out a little bit, there we go. And the reason it's strong is because in their own right, these levels are well developed. The thicker the line, you can see, you might not be able to see, this is a level that was tested twice and held. These ones here were single results, but down here, these are much stronger. They're wider because they've been tested multiple times and held. Now, in their own right, they're strong. So here, obviously, they were acting as support, and then that was breached under decent volume. Now they are acting as technical resistance, not only in their own right, but also as a pair, because when you get a cluster of two like this, this is immensely strong. And you can see it's actually tested it pinpoint accurate to the upper level, and it's pushed it back down again. So, this is what I mean by using multiple charts in multiple time frames. And in this case, what we're doing is we're actually using related markets, if you like, to give us little bits and pieces of additional information that are going to help us. Because what's interesting here, we've got the three indices, which I was going to say, generally speaking, move in the same direction. Certainly over the last few weeks, that's not been the case. But what they also fill in is little gaps of information. And what's interesting here is having that volatility trigger in there, which you haven't got on this one and you haven't got on that one. But the fact you've got it on here will just give you a little bit of confidence to say, oh, okay, well, I might be expecting some congestion here and possibly even a full-blown reversal, but certainly something in the way of congestion to follow, which is actually what we're seeing right now. And a similar sort of pattern is developing over on the VIX here. Just pull this over again. We had a volatility candle here. This is on 15. Markets moving inside. Didn't have a volatility on there. We had it on the previous candle. Nothing on here. We've got a volatility candle here. Another one following. So we're moving sideways. Nothing much on 5 to speak of. Just move that back out of the way. But that's why we're seeing this sort of pause point at the moment in terms of the move lower and into a possible congestion phase. You can see here on the trend monitor, pretty slow compared with what we were looking at in terms of the renko, but in terms of the general trend, it's bearish, bright red, bright red, bright red. Again, it's another reason for having up, I was going to say quasi-related markets. Of course, these are related markets, but it's just another facet of the market relationship where you look at relationships within that particular market itself. In other words, you're looking at equivalent risk asset classes. In other words, indices in this case. In the Forex world, you'd be looking at related markets internally. In that case, you'd be looking at it from the currency matrix point of view. So in other words, related currencies to the one you're trading. And then of course, you're looking outside of that to other factors related to markets, which are not within that particular market sector, but in other market sectors, either risk on or risk off related asset classes. And as always, down at the bottom, we've got the daily. It's the NQ, which has been rip-roaring away, showing no signs of slowing other than today. Good move yesterday, good candle, nice volume. But then on the other charts, on the YM, we had whilst the YM was going sideways through this period, the NQ was actually rising quite strongly. Then we had a reversal of that where the NQ maybe flattened a bit, and we had the YM trying to play catch up, if you like. Now we've come into a little bit more weakness sideways, and the same sort of price pattern. The two either side, in other words, ES and YM, have really been following one another relatively closely, both in terms of up and down days, in contrast to what has been going on in the NQ, which has truly been driven by really the big boys and tech in general. That's what's been driving it. And again, you can say, well, why is that the case? Explain to me why. The fact of the matter is that's what's happening. That is what the market is delivering at the moment. So sometimes you just have to say, okay, just trade what I see on the chart and trade without an opinion. Trading with an opinion is about the most dangerous thing you can do, other than all the things we do in normal daily life. But trading with an opinion is so dangerous. Just leave it at the door, just come in, see what you see on the charts. Don't analyze everything to the nth degree as to, well, the market's rising and actually I think it should be falling because this is that and that should be doing this and blah, blah, blah. Just trade what you see. It's as simple as that.
I'm just going to say something, but I'm not going to change.
Yeah, just pass over to Anna for a moment.
That's a really good point. Just a couple of things I'd like to say about that, and that is, right, with regard to the indices, that's the Dow, the Nasdaq, and the S&P. Well, certainly the YM, which is the futures for the Dow, that has been lagging, hasn't it, David? That's certainly not been going gangbusters like the Nasdaq. That may likely change because if you are going to trade indices, it really pays to investigate, well, what is the index made up of? What are the stocks that make up that index? And there's been a bit of a change on the Dow this week, in as much that Exxon has been kicked out, basically, and it's been replaced by Salesforce, Amgen, and I think one other. And essentially, it's becoming more techy, if you like. And David said, well, tech is leading the way. The market is being led by actually a very small number of stocks, because the market thinks that the future, given what has happened with the virus, is that the future is technology. So the old dirty industries and the green agenda, if you like. So a lot of the oil stocks, airlines, they've had a torrid time these last few months. The market is always thinking ahead. So if you are going to trade an index, have a look at what are the components of that index. What's leading, what is driving that index at the moment? And you may have read that, yes, the markets are going up, but there's no breadth. And by that, they mean that it's being pushed higher by a relatively small number of technology stocks. The other point I want to make about, that you'll probably have read that market commentators, very distinguished analysts saying, these markets can't go any higher. These markets can't. They've got to, they've got to roll over. If you look at the daily charts of, say, the Nasdaq, it is just a series of soldiers going higher, just marching ever higher. And we do get more worried, and we call it climbing the wall of worry. When markets go up, it seems to trigger in people a fear, well, it can't go any higher, it's got to reverse, I've got to put a short in. Tesla, for example, is the most shorted stock in history. People have, traders have been burnt by millions and millions because why is it? It can't go any higher. Well, it has. So, try and keep that opinion, out of your thinking, if you like, if you are an intraday trader. If it's going to be an update, it's going to be an update. If it's not going to be an update, it's not going to be an update. Also pay attention to what is going on at Globex. You haven't got my screen at the moment, but if you look at something like the hourly chart of the YM and the other indices as well, you'll find that, when they say, oh, the Dow is up today, meaning the cash market, but we're talking about the future, the futures market, most of that gain, certainly in the indices, has happened in Globex. And if you look at the portion of time that it is open from the physical open, when the US markets open, sometimes very little, it carries on, only a little way, and sometimes it's actually reverse sentiment before moving up the next day. So always have a view on what is going on in Globex as well. And my final point about these markets going any higher, there's a saying certainly in investing, that's when the last bear throws in, the perma bear throws in the towel, then we are probably reaching, a point of, a turn, as it were. And I won't mention who they are, but I follow all sorts of people with all sorts of opinions. I like to read, people who are very bullish and people who have been very bearish. So there's two people that I have a lot of respect for. They're very distinguished people in their field, but they have been almost perma bears. Every article has been 26 reasons why this market cannot go and it shouldn't go. Think of listen to this word, shouldn't go any higher. Well, it's doing what it's doing. And I had a notification yesterday that in fact they're kind of throwing in the towel. They said, yeah, we've made a mistake. No, it's going higher. So as I said, don't trade with an opinion. Trade what you see. If it's going to go up, it's going to go up. Hopefully we have given you the knowledge in terms of being able to deconstruct price action, read it with the volume, using support and resistance, using multiple time frames, using candles and candle patterns. And if you've invested in our tools as well, the tools are there to support the methodology. That's why we have developed the tools that we have. We haven't developed random tools that don't bear any connection to the methodology that we follow and we have followed for 20 years. So I'm going to get off my soapbox now, and I'll pass you back to David. From my own, what I was looking at before, let's have a look just very quickly. I won't take the screen. We did get a reversal on on cable, and there was actually a little trade to the downside, but again, it has come to a dead stop at exactly the same point where it actually took off on the little trade higher, bang on the S3, and it's now trying to reverse higher as well. I mean, Forex moves like this, it oscillates, and you just have to find a pair where you go in, you come out, you go in and you come out, and then you've got the consolidation periods in between.
Thanks, darling. Sorry, I was flicking around all over the place, just checking in on one or two other markets. Had a quick look at oil. Still very sluggish. Trying to move higher. We've had OPEC and all the rest of it, and it still really hasn't given it much momentum. And even with the long-term downtrend in the dollar, that hasn't really helped much either. Back on the YM, just seeing this little rally develop. We saw the buying coming in down here. Good volume, decent week's lower candle, bit of congestion. What we've also got going on pretty strongly now is a reversal in the VIX. Pull that up. There we are on 5. That's on 5. So we've had some congestion, and we're now starting to see the VIX move lower. We've got volatility again. So again, it's a question of being cautious. But is this going to follow through? Are we going to see reversal in here? Congestion. And over on to 20 there. So it's giving us a straight heads up as to why we're seeing this reversal. We've seen it in terms of the volume that's coming in. perhaps not so much on the 1am, certainly more so, sorry, on the 10 minute, certainly on the 5 minute, a little bit less so on the 10 minute, and over on the 15 minute. You've seen the rising volume, but then you've seen a pause point coming in here. And if you then move up onto the faster time frames, the question is, how far is this going to go? Where is it going to take us? Is it worth jumping in? If we've closed out on the short, are we going to go long? Take some money from the long side. It depends on it depends whether that style of trading suits you. It may not. I mean, a 15-second chart may horrify you. It may not. But it's a very, very fast way. If you enjoy that sort of trading, it's a nice way to make money. You can see it here. Trend Monitor works in exactly the same way, keeping us in through this area here. What have we got? We've got rising volume and rising price. We've moved through these low volume regions. We're out of this congestion phase here in terms of the volume on the volume point of control. We're moving up into a low volume area. And over on the right hand side, the VIX is dropping all the time. So, you're quite comfortable taking a trade to the upside, scalping a few points out of the market, get in, get out. Remember, each of these points is worth $5. You can go to the big Dow, which is $25 a point. You can go obviously multiple contracts. But if you're starting with index futures, I would urge you to start with micros, which were introduced last year on the CME. So you can get a 10th size this contract. And the other benefit of that is you will require far less margin to get in. These are chunky contracts. You will require several $1,000s to support just one position. But if you're trading on micros, they're extremely popular, very fluid, very liquid. Lots of participation, so the price action is pretty smooth. There's no sort of jerkiness which you see on if you're trading micro futures in terms of other markets. Currency micro futures, for example, they're very spotty. You don't get this smooth price action. They'll jump around. You'll get a pause point. It'll go there, then it'll go up there, then it might go down here, then it'll go there. That's because there's a lack of participation in those contracts. You won't see that in an E-mini micro contract. You won't see that. You'll get nice, smooth price action as you get here. Seeing a little bit of a pause point, but a little bit of a reversal, some selling coming in. Is it going to be very much? VIX is still dropping away. We see any reversal on the VIX, then quite possibly. But it's not reversing at the moment. It's not going into congestion for the time being at any rate. Up onto the 1 minute. What does the 1 minute look like? Pretty similar picture. Nice volume under that candle. We've got a pause point here. This volume here and this volume, and this is what it's all about. It's really comparing volume with price action and whether it's either anomalous or in agreement. And secondly, how does your benchmark candle compare to what you're seeing at present? So when you look at a candle like this, which is a nice widespread up candle, you look at the volume associated, which is this one. And then you look at previous candles of a similar type for confirmation. So you might look at this one, for example, and say, well, okay, it's about to here, I guess. What's the volume? It's actually a little bit higher. So perhaps this candle is looking a little bit weak purely because the amount of effort that's gone in to produce that amount of result is not the same as here. We had more effort going in here to produce less of a result. In other words, this took more effort to get that distance, whereas up here, bear in mind, we're also moving through quite a heavy congestion period here. It's taking less volume. So there's no surprise when you start to see this sort of price action developing where you've got, a bit of sideways move going on. In this candle, what have we got? Move to the downside. Volume coming into support. The next one up's pretty low, but it's in agreement. It's not in disagreement. It's not saying, obviously what you've got here is you've got volume falling away, which is not a great signal in its own right. But that candle and that volume bar are in agreement purely because the spread of that candle is pretty narrow, and so you would expect the volume to be lower. If you had a lump of volume like this coming in on that particular candle, then you can infer that that's pretty heavy selling going on in there because there's so much effort going in and the price action's gone nowhere. So clearly it's selling because it's the insiders, the big operators, the market makers are trying to sell into a weak market which is resistant to a move higher, and therefore they're selling into a narrow spread candle. It's as simple as that. Now what are we seeing? We're seeing on the VIX a bit of a pause point. That's really what we're seeing here as well. We're also moving into this pretty thick area of congestion in terms of the volume point of control. That's what the volume point of control gives you in addition to all the other indicators. Not only does it tell you where the volume point of control is itself, in other words, the heaviest volume and the fulcrum of the market, and that's what you're waiting for all the time, a break away from that region. But what it also defines is these areas of volume on the chart, where you get low volume areas, where you get high volume areas. Where you get high volume areas, you expect the market to struggle because it's going to take an awful lot more effort to break through that region than it will through here. So if the price gets up to here, you would expect to hop through there pretty quickly, which as a trader is what you want to know. But of course, you'll see that on different time frames as well. So it's all about using multiple time frames and just reading all the bits and pieces of the puzzle and putting them all together to give you the confidence to either make decisions to get in or make decisions to stay in or make decisions to get out. And of course, we've got the support and resistance building. We've got a cluster here now. We've gone through it. We're underneath it now. So we've now got to go back through it again. Got some decent volume on that last particular candle, which is telling you that, you know, this selling pressure that was here, if this had been in agreement, then it should have been down here somewhere, back to the VPOC, because you would have had a widespread down candle on that amount of volume. Possibly not quite that much, but certainly something more like this. But you haven't got that. You've got a narrow spread candle, little wicks at top and bottom. So at the very least, you can infer that the selling pressure has been absorbed here. In other words, you know, we're looking for a continuation of the upside move. How far? I can't tell you right now. Obviously, what you're looking for ideally is, first of all, to get through this level here, get out the top of this, to push through this. And if we can get up to here, then you've got a nice, you know, nice run through here. You've got some decent points to grab. But first of all, we've got to break away from this region we're in at the moment. That next candle's okay, that's fine. And bear in mind, this is all on a 1 minute chart. And the VIX is now is reversing again. You know, it's all over the shop, up, down, up, down, up, down, which is why we're seeing this at the moment. Now we're starting to see a little bit of an effort to kick up. We want to get up to this level, take this level out, and then push on up to 480. Bear in mind, that's, you know, that's 30 points. That's 150 bucks. So it might look a little space on the chart, but in terms of monetary value, it's worth having. I'll just see if this gets up to this and tests. And really, it's based on a single candle analysis, if you like, of this selling pressure that came in. It didn't follow through. It was absorbed in this region. Now we're starting to see some weakness come in. We've got an effort to rise. We've got, it's capped off at this region on the accumulation distribution. This level is 5, so it's pretty strong. You can see it's hit there. It's bounced off it. Lots of volume gone in there. So, you know, it's not looking terribly strong right now. But below that, we've got a cluster of support. So we're trading in this very narrow channel of having a ceiling of resistance here, which has now moved up. This moves constantly. All the time this is tested and retested. You know, a lot of the traders are surprised. They think, well, you know, why is that moving? Well, because it's being tested and retested constantly. These indicators work within the price action. They're not some vague distance away. They're not some vague area of congestion. They are pinpoint accurate, and that's how they work. They're just, the algorithm is constantly calibrating and retesting and recalculating which are the most important areas within the trading price action. Still bouncing off this little cluster here. So it's a very, very narrow range of price action. Let's go and have a quick look at a slower time frame chart, down onto 5. Almost seems like a crawl down here. But the trend monitor is still bright red. You know, this is basically looking at this and saying, well, yeah, fine, okay, we've had this mini reversal, but you know, is it actually a true change in trend? Doesn't look like at the moment because it hasn't even transitioned yet. So, you know, that's the power of the trend monitor, using it in multiple time frames in that particular way. Just make sure, see, I haven't got any more questions. Thanks, Tony, much appreciated. And as I said earlier on, if you are getting into trading indices, please start with the YM, preferably start with the micro YM, because that is the smallest contract on the least volatile index of all. That's my suggestion. You may not choose to take that advice. It's free advice, and it's based on years of experience, I can assure you. Looks like it's going to try and push again through there. Let's see. Have another run up there. Have a look at the 3 minute, just get a different perspective. Not much in the way of, we've got a kind of low volume node here, but an awful lot of volume. And, you know, in terms of the trade, where's that trade going to take us? Well, you know, back to the volume point of control. If it gets that far, then that is where it's going to congest. So the question you've got to ask yourself is, you know, is there enough points for me? I would say in this case, yes, it is. You've got no volume, you've got no price resistance ahead to speak of. You've got a nice little low volume node, so we should move through there pretty quickly, which we are. And then it's on up here, so you've got 30 points of clear water. Yes, you've got volume building as you approach, but then you expect that anyway. So it's a, you know, it's a nice little move higher. Just pop down, back down onto, where were we on the 1 minute? Or yeah, let's pop onto 1 minute again. There we go. And really, that was all triggered off this particular candle here. The volume came in, it's not selling. The buying has come in there and helped support it. A little bit more here. We've got this nice platform here. We've broken through there. Now we're moving up here. Where are we going to? Well, 80 would be nice. If we get through 80, that should move through there pretty quickly. Volume's nice and low here. Really, all the way up here, we've got pretty low volume. So in terms of a decent move, the VIX is starting to drop again, which is good. And that's why we're starting to see the pickup. Here's the VIX, just to give you the full picture. There we go. VIX is falling, VIX is falling, VIX is falling away and falling away there. So, you know, it's giving you the confidence to stay in this one. As long as that keeps dropping, which it has, just dropped another tick. So that should give it another kick up here. And, you know, that's the way to trade the indices. Nice and relaxed, see what you know, trade what you see on the chart. Don't worry about too much anything else, just trade what you see and just sit tight and you know, let the trade run, let the trend monitor work for you, let the trend dots work for you on the renko, and use them in multiple time frames. Whether you're using non-time based charts or time-based charts, the principles are exactly the same. There we go, run right over time. Sorry about that. Apologies. Just to point you at the various sites. This is Quantum Labs. Just give you a heads up on Quantum Labs there, labs.quantumtrading.com. This is just putting up screenshots for the TradeStation. This is on radar screen. A lot of the indicators will be available in radar screen. This is on the currency strength indicator. So you've got the currency strength, you've got the currency pairs ranked down here. Over on the right-hand side, you've got overbought, oversold signals and also crossing signals here as well. It's a huge amount of work gone into these, I can assure you. We've got the array in there, we've got the matrix, all sorts. So that is coming along on TradeStation. This is where you find all the current indicators at quantumtrading.com, MT45, NinjaTrader 78, and TradingView. As I say, TradeStation's coming along both for TradeStation Global, which is the relationship between TradeStation and Interactive Brokers. So if you have an Interactive Brokers account, you can hook it straight through to TradeStation, trade through the TradeStation platform. So that's what's going on there. Once we've launched that, we'll be dropping back onto TradingView. We will be developing all the other indicators that are not available there for the TradingView platform, because we now have the power to do it within the Pine script, which is great news. If you have the TradingView full package, it's good news for you, because you will be getting all those indicators as a free upgrade. So if you're thinking of buying any indicators, buy them on TradingView, the full package. You get the others as a free upgrade. It's not a bad deal, I can tell you. That's where the indicators are. In terms of the Forex trading program, you can find it all at quantumtradingeducation.com. It is the complete Forex trading program because it covers everything you need to trade, to know how to trade Forex with confidence. Psychology of trading module, fundamental analysis, relational analysis, technical analysis, and the mechanics of trading. And then you've got this whole array, webinar library, you've got topic webinars, putting it all together. How to use the indicators, of course, it's all in there, and a massive number of VPA chart examples, plus the VPA room I mentioned earlier on, which is actually up here. which is hosted by Anna and myself. We're there every day, so we'll answer your questions, or other traders, other students there will also help to answer them for you as well. We have many experienced traders in that particular room. So there we go. Hope you've enjoyed everything today. Thank you so much for coming along. We are back next Tuesday. It's bank holiday here on Monday, so the markets will be pretty quiet in the UK. Tuesday we're back, Tuesday morning, 7:45 UK time. We look forward to seeing you there. Enjoy the rest of the trading day. Enjoy the rest of the trading week. Have a great weekend. Stay safe as always, and enjoy it. See you soon. Thanks very much for coming on today. See you soon, and bye for now.